Well, aloha. It's Friday. Here we are in Southern California. It's going to be another gorgeous weekend. And aloha. So, here we are, back at it. Another gorgeous week. And we're now in May again. We're starting, I think today's the 10th. So, yeah, we're in essentially the second week of May. And it's beautiful in Southern California. So I think the wind was kicking up a little this morning on my way in. But let's talk about what's happening in the real estate market. Mortgage rates. Isn't that what everyone's talking about? Now, you may have heard that mortgage rates are going to stay a bit higher for longer than originally expected. Everyone was talking about, towards the end of the year, we were going to start seeing those drops. Well, it's not happening. And if you're wondering why, the answer lies in the latest economic data. Now, I'm going to give you a quick overview of what's happening with mortgage rates and what the experts say is ahead. So let's look at the economic factors that impact mortgage rates. When it comes to mortgage rates, things like job market, the pace of inflation, consumer spending, geopolitical uncertainty, and more, they all have an impact. Another factor at play is the Federal Reserve, what we like to call the Fed, and its decisions on monetary policy. And that's what you may be hearing a lot about right now. Here's why. The Fed decided to start raising the federal funds rate to try to slow down the economy. Remember that? And inflation in early 2022. That rate impacts how much it costs banks to borrow money from each other. It doesn't determine mortgage rates, but mortgage rates do respond when this happens. And that's when mortgage rates started to really climb. Now you have to remember the Fed fund is what banks charge each other to borrow money. So, and if you're going to be lending to mortgages, you're going to have to borrow the money to create those mortgages. And that's part of what happens. Now, while there's been a ton of headway seeing inflation come down since then, it still isn't back to where the Fed wants it to be, around 2%. So now we've gotten closer to 2% since 2022 when they started worrying about it. But we're not near the 2% yet. It's even inched up a hair over the last 3 months, and that's having an impact on the Fed's plans. As Sam Katner, chief economist at Freddie Mac, explained, strong incoming economic and inflation data has caused the market to reevaluate the path of monetary policy, leading to higher mortgage rates. Basically, long story short, inflation and its impact on the broader economy are going to be key moving forward. As Greg McBride, the chief financial analyst at Bankrate, said, it's longer-term outlook for economic growth and inflation to have the greatest bearing on the level and direction of mortgage rates. Inflation, inflation, inflation. That's really the hub on the wheel. Now, when will mortgage rates come down? Well, based on current market data, experts think inflation will be more under control, and we still may see the Fed lower the rates this year. If it's going to happen, it's going to be later in the year. It'll just be later than originally expected, like I said. As Mark Frantantoni, chief economist at Mortgage Bankers Association, said in response to the Fed Open Market Committee's decision last week, the FOMC, which is the Fed Open Market Committee, did not change the federal funds target in its May meeting, as incoming data regarded the strength of the economy and stubbornly high inflation have resulted in a shift in the timing of a first rate cut. We expect mortgage rates to drop later this year, but not as far or as fast as we have previously predicted. Now, in the simplest sense, what this says is that mortgage rates should come down later this year, much later this year. But timing can shift as new employment and economic data come in. Geopolitical uncertainty remains, and more. This is one of the reasons it's usually not good strategy to try to time the market. Now, an article in Bankrate gives buyers this advice. Trying to time the markets is generally a bad idea. If buying a home is the right move for you, don't stress about trends or economic outlets. So what's the bottom line? If you have questions, call me. That's it. And we can discuss it. Because right now, the rates aren't going to drop till probably the end of the year. More than likely, I think he said that the chairman of the Fed said that probably not to expect anything really until 2025. But if you have a house, you find a house you need to move, or you found a house that you need to buy, whatever the circumstances, let's get into the house. Because again, houses prices are going up. And when the mortgage rates really begin to fall, there's going to be all those people that have been waiting and are getting into the market, and it's going to get harder to buy a house. And again, what I like to say, or what we like to say in the industry is, you are marrying the price of the house. You're only dating the interest rate, because we can change that when the prices fall. We can refinance. So if you really are interested in buying a house, or you're interested in selling and then buying a house, let's get into it, because the prices are going to go up. And like I said, once interest rates begin to drop and the prices, we're going to get into supply and demand. We've got a limited supply. Everyone's going to start buying again. Demand's going to go up, and prices are even going to go up higher. So, all right. Well, that's me just talking. You have a great week this week. And if you want, it's a good time to go look at houses, So this is Jamie Barber with Jamie Barber Homes. My contact information will be in the comments below. And it's Aloha Friday. No work till Monday. Well, unless you're in real estate, you're in hospitality, or sales, then you're working. All right, have a great weekend. Go look at homes. And if you want to talk about things, contact me, Jamie Barber at Jamie Barber Homes, and I'll be happy to help you. Aloha. Have a great week.